Hello, everyone, and welcome to this special debate which comes to you from Durban at the Mastercard 2019 Indaba. My name is Godfrey Mutizwa. Now, I believe it was Mark Twain who said in 1897, and I quote him here, "The reports of my death are greatly exaggerated," end of quote. And I think, so it is true, of the great royal that refuses to die, cash. Cash, ladies and gentlemen, remains king in Africa. In South Africa, we are talking about 65% of the market, and in Africa, we are talking about 95% of the market. And I raise these statistics not because they are insurmountable, but because I think they represent the scale of the opportunity that is before us. So welcome to this special debate where I am going to be joined by a panel of experts who are going to help us to find the answers that we require. So let me introduce them for your benefit. I have John Anderson. He is Head of Industry Payments at Standard Bank. Thank you, John. Welcome. Clayton Hayward, co-founder of Ukesha.
Thank you.
Thank you, Clayton. Ahmed Kasim, Managing Director at Hello Group. Welcome, Ahmed. And last but not least, Gabriel Swanepoel, Vice President Business Integration at Mastercard. Welcome. Thank you, gentlemen. So, as I said, we are talking about an issue that has been with us for the ages. And I want all of you, at the start of the discussion, to give me your understanding of where you see the future of payments in Africa, given the issues that we have here, and obviously speaking from where you are in terms of your business. I'm going to begin right at the beginning on my extreme left, and then come right into my panel. Gabriel.
Thank you. Yeah, so I think, to understand the future, it's almost necessary to look at how we've articulated the past. And I think to a large extent, if we think about payments in Africa, it was always a story around traditionally a lack of infrastructure. And I think that in addition to the lack of infrastructure, there was also the question around, from a cost perspective and from a capital investment perspective, whether we could deploy infrastructure in a way that made sense. And I think that over time, with smartphones becoming ubiquitous in the market and with Africa in many ways leapfrogging, traditional infrastructure to get to a point where smartphone proliferation are picking up across the continent and, access to communication and access through the internet is making connectivity and just connectedness in general more accessible. The supply of these services have become easier because the infrastructure issue has been dealt with. But I also think that it's a function a little bit around the product development cycle and the way that we've traditionally looked at product development. I think that specifically from a payments perspective, we've to a large extent tried to articulate what is the value proposition. And for 20 odd years, we always talked about the value proposition. And I think what's becoming clear now is just that it's almost got nothing to do with the value proposition. It is around consumer utility and how we provide value for the consumer. And in terms of creating that value, we've got new and interesting partnerships that's being formed and forged across the continent where people are doing the things that is core to them, to their own businesses, and really adding that value to the consumer by collaborative efforts. And I think that, as we move forward, we're going to be seeing more of that. So we'll start to see that, the collaborators of the past will introduce new partners into the ecosystem in general. And I think that from a payments perspective, it's not going to be about making the payment at the end of the day. It's going to be about creating value for the consumer.
Absolutely. And finding new partnerships as well in order to be able to create that value. I like the fact that what we're talking about is we say we need collaboration, but we also need innovation, almost like things that traditionally you would think are mutually exclusive, but which do need to work, and we do need to make them work as we get into the future. Can I come to you, Ahmed, your view?
Yes. Godfrey, firstly, thanks. It's a pleasure and a privilege to be part of this panel. So at the Hello Group, we have a very simple ethos. It may sound cliche, but it's truly understanding what the customer problem is, putting on in our world, putting on your jeans and your T-shirt, walking the streets, engaging with customers, living their lives through their days, understanding the challenges with regard to education, with regard to economics, with regard to cost, with regard to access, and then designing from the bottom up. And for us, it's not, the payment is a byproduct of a life-changing experience. So truly understanding what is going to change your customer's life is what's going to lead to winning or losing. And we've been operating for 14 years right now, and it's a simple ethos. Asking customers what do they want and designing around them. And I'll give you an example. In our cross-border remittance space, which we launched about 5 years ago, prior to our existence, it was very expensive, very long process, no pricing transparency. But customers self-educate once you can show them the benefits of using a solution. And in the case of remittances, it was a cheaper, safer, legal, tech-based solution which changed lives. And that is the core of what we do, homing in on the problem and trying to solve it through education, trying to solve it through access, trying to solve it through technology.
So you're a teen. Has it been an easy life?
I think we're growing up a bit now.
You've taken life's blows and pains.
Yeah, but yeah, start with the customer and everything will work out at the end.
Can I come to you, John? So I imagine some of the pain he's talking about would probably have come from peers, including not yourselves. I am being careful here, but certainly you're one of the big four banks here in South Africa, and we do know that it's a space that many people, when they talk about competition within the industry, there's a lot of gripe. But let's talk about the future, and let's talk about the role for players like yours, because you offer us stability. Yes, we complain, but you come with very important role to play as well.
Yes, thank you, Godfrey. Certainly the banks have a very important role to play in the future of payments. Ahmed's spoken very eloquently about the need to solve customer problems. You spoke about the predominance of cash in Africa. And I think that we mustn't forget that what we're trying to do is help our customers, help the people of Africa live their lives. And payments are an absolutely critical part of that equation. And so we get a little bit consumed by card-based payments chasing EFT-based payments, chasing mobile money, and the three of them chasing each other. And at times we forget that the enemy is not each other, it's cash. And so how we go about solutioning for what cash gives to consumers is, I think, what the future of payments is all about. And what does cash give you? Cash gives you certainty. So if I give you 10 Rand, you know it's worth 10 Rand. So there's certainty. There's a degree of, well, there's not a degree, there is immediacy. As soon as I give it to you, the value transfers from me to you. And then there's broad-based ubiquity. You know that you can use that cash to do the things that you need to do. So I think those three things for me are critical when we think about the future of payments. It's thinking about solving customer problems, it's replicating what cash gives to us. And I think we've become, as an industry, all of us, a little technocratic, and we focused on the tech and we focused on all the wonderful things, and we've forgotten about that core promise and what it is we need to do.
Absolutely. And one of the big problems that we need to solve is the issue of the cost of money. Yes. And I know many tales of people trying to send money across borders and losing as much as 30% of the amount that they are sending. And if I can come to you, Clayton, I know you are one of the big problem solvers on that front. Your perspective.
Yeah, I think, if we look at, I see payments almost like the mobile operators have data. So payments are a utility. They should be there. Everybody should have access to them. And like we had platforms like WhatsApp disrupt the telcos, payments are that disruption that we can use, that we should be able to all plug into to enable the informal market, the 60% or 65% of the market, as you mentioned, in South Africa, for them to tap into the formal market, because we've got all these people with money and we've got all the people who want money, and really we have to use payments as that bridge between the informal and the formal economies and give them a reason to want the digital payments. Because I think cash is great because, as John mentioned, you know exactly what it is. You don't have to prove your identity when you hand over 10 Rand. You don't have to do anything. You just hand the guy 10 Rand.
Yeah.
With the digital payment, you have to do all these things that create these barriers to entry which then people say, well, why must I do that? I'll just give the guy 10 Rand. So I think we need to take away those barriers and solve the real problem, which is driving commerce in terms of giving them a reason to transact.
Yeah.
And that's really where I see the opportunities.
And that's where you guys come in as well in terms of the cost of those transactions and reducing the cost of those transactions. Yeah. Has it been an easy life for you in the year or so that you have been around?
No. No, so if you asked me a year ago, I was very excited about the business. I thought it was a great idea.
Yeah.
If I had to restart it now, I don't know if I would do it because it's a hard journey.
I don't want you to point fingers, but I do want to know where your pain came from.
You know, the big pain is, as I mentioned, is it's all around the banking incumbents, the regulator. They fear change. So when you come into the market with something new, the first response is, let's throw the rule book at it. And I think what's been great is, over the last 6 months, is seeing the change in when they, you know, I think what we were lucky is when we went to market, we had a big adoption. So we saw the consumers really wanting the solution. And I think getting the consumers adopting the platform made the incumbents in the market look at us and say, well, actually, they must be doing something right.
Right.
So let's rather work with them than try and switch them off.
I'm going to come back and talk about your example and what you are bringing. Right now, I want to refocus your minds, gentlemen. We're going to talk about 4 things here today. We're going to talk about a word that's been used freely and commonly, convergence. We want to define what it is and what it requires. And perhaps, as you said, a change in attitudes is perhaps one of the things that we ought to be looking at. We want to talk about the models that we will need to carry us into the future and how those models interface with the old establishment that we have, because you can't throw away the baby with the bathwater, right? Right. We need to make everything work. And we speak about the customer being at the center of everything that we're doing. How are we going to do that while we are instituting all these changes? And finally, we need to talk about the rules of engagement. We need to talk about the rules of engagement from a regulatory perspective, because we do know, well, I think if you ask economists here in South Africa and you ask people who are in the business environment, they will tell you that our central bank is one of the most conservative in the world. And we just saw it, I think, a couple of weeks ago, where they were supposed to cut interest rates. They did not cut interest rates. And many of us who are pseudo economists were saying, what's wrong with these guys? But we need to drag them along, kicking and screaming. So those 4 things, gentlemen, is what we want to talk about. Obviously, you're going to speak from your perspective within the industry. I'm going to start with Ukesha here, and I want us to tackle the issue of the rules of engagement. Yeah. We know central banks also have to innovate. We know central banks also need to adopt the technology that we're seeing coming into the market. You tell me if you are seeing evidence of it, and then you tell me what you need to see changing.
I think in one of yesterday's talks where we had this discussion about open banking and open APIs and integration, I think what's lacking still in the South African market is that environment. So banks, insurance companies, the regulator are scary places. As a fintech starting a business, you're actually afraid to engage with them. So what you do is you pull out the regulations, you try and Google what is PAS's regulation on merchant acquiring, or you Google the next thing and you say, okay, well, how can we sidestep this regulation so that we can pay for a legal opinion so that we think we'll be okay? So if somebody comes to knock on the door, we'll give them our legal opinion and we say, no, we're legal, because there isn't an openness. So none of the incumbents, the banks, or the regulator now has set up a fintech division, only very recently.
Sure.
But they're still not approachable. So there isn't a website or a LinkedIn page where you can, this is the guy you must call, this is his phone number, and have an open discussion. I think the challenge is, as a fintech, is you're afraid to engage with them because you've got these great ideas to start a business, and you think, well, they're just going to shoot me down.
Sure.
So that feeling of going to them isn't there. There isn't this warm, trusted environment,
sure,
which I think all of us want.
Yeah.
And after a year now, we've been welcomed into that environment. We've had great support from the regulator and from the banks.
Yeah.
But it took a year to get there. It would have been great 12 months ago to have that warm, welcoming response.
Absolutely. Scary place. John, is that how you describe the sub?
I wouldn't actually. I think we need to reflect on what regulators and central banks are there to do. And in the South African context, if you think about the Twin Peaks model that's been adopted, a key pillar or key peak is prudential stability. So the primary role of the Reserve Bank in the payments space and in the broader financial services space is to make sure that we maintain stability, we mitigate risk, and most importantly, we look after consumers' monies. One of the challenges that we face is, and Clayton has alluded to it, is that there are lots of people who are trying to bypass regulation. And in doing so, they introduce risk into the system. And so finding this balance between prudential stability, looking after customers' deposits, and enabling innovation is where I think we're collectively challenged. The big five banks in South Africa, in fact, all the banks in South Africa, are strictly monitored, and we have to comply with a very strict set of rules and regulations.
Yeah.
And for us, it's massively problematic if people play in this arena. Everyone wants to play, but no one wants to take the risk.
Yeah.
So it's lovely to enter the arena as long as
Sure.
the banks carry the risk.
Yeah.
And that's not how it works.
But
It's about
do disruptors, John, necessarily need to play by the rules? And how do you manage that balance between the need to encourage the disruptors to come into the market while, at the same time, maintaining the stability that the SAB and other traditional central banks bring?
I think there's space for everyone, and I think what everyone needs to be cognizant of is the risk that they introduce, and I think that everyone needs to be appropriately regulated based on the risk that they introduce into the system. So it can't be that I, as a bank, carry all the risk, and you, or Clayton, as a fintech, gets to play on the periphery and introduce risk.
Yeah.
And so finding this balance between the participants. And following what I would term a much more risk-based approach, and appropriately regulating the participants based on the risk that they introduce is where I think we've got to get to.
Absolutely. We have a challenge, don't we, Ahmed? Because I'm thinking here, can you have an agile central bank that enables this platform, that enables the others to come in, while at the same time it's regarded as one of, as they used to say in the past, as safe as Fort Knox?
Yeah. I think so. I've got an alternate view and experience from as Clayton has, because we've been regulated for 5.5 years now, and we found the regulator nothing but supportive. And it's a journey that you go through with them. And as they become more confident in your abilities, your understanding of risk, compliance, operating in a regulated environment, they allow you to do more things if it makes business sense. And we've seen over the years it changes where they have open doors, and we can go and discuss like what's actually happening on the ground rather than designing regulation and policy frameworks in a tall building in Pretoria.
Yeah.
That's what actually happens. So we act as a bridge between what customers are actually experiencing, where the risks are, where the loopholes are, where the theft is happening, where the improvements can happen. And they've been very, very, very much supportive. And I think if they adopt a similar line in the banking regulation as they have done in the cross-border remittances, I think it will create opportunities for companies like ourselves and UCashare.
Should this relationship, Ahmed, do you think, be necessarily, how shall we say, turbulent? It needs necessarily to always to be alive, isn't it? Because you need to keep pushing, and they need to keep pushing back, and while at the same time allowing you room to keep pushing and making it uncomfortable.
I think they are a strategic partner to anyone involved in payments, so it needs to be totally collaborative, and it needs to be win-win. And we've certainly experienced it where common sense prevails, and you can get what you want.
Yeah, that's a challenge, isn't it? How do you regulate an innovator? Because necessarily by definition, how do you regulate an innovator and an interrupter, right? Because necessarily an interrupter must test the system and challenge the system. Can I come to you, Mr. Mastercard?
I think the rule of thumb here is that that regulation must follow innovation. I don't think it can be the other way around.
Say that again. Regulation must follow innovation.
Yes. So I think that it's very hard to create a framework and create the rules if you don't understand the parameters in the environment that you're operating in. And I think in many ways, what we've seen, I mean, Gorang spoke about it this morning, you know, we're in the 4th year now of actively collaborating with many participants across the payments ecosystem and landscape. And that includes the banks, which in many ways are the fundamental, you know, player within the space. But the reality is that, you know, 4 years ago, if, you know, somebody told me that Clayton would have founded a business like Ukesh and they are doing the kind of work that they're doing today, or that, you know, from a network operator perspective, we'll be having conversations with Hello Group, you know, as a partner in market, I don't know whether those are the dots I would have connected. And I think that the reality for us is that if we look at the regulatory framework as it stands today, it is built on a legacy of best practice and things that have worked in the past, but that doesn't necessarily guarantee, you know, a future that is going to deliver on what we would need for a level playing field, the distribution of even risk across the different participants, you know, making sure that there's an open access in the way that new entities can engage from a regulatory perspective. So I think that the future for us is to Ahmed's point is that we would need to have a collaborative approach. The regulator needs to be part of the process. I think that we need to have open communication in the way that we engage. But I think that, you know, ultimately the business models need to work, and the way that we think about things like displacing cash needs to be proven, and it needs to, and once we understand the framework in which it operates and we understand the participants, then you're in a position where, from a regulatory perspective, you can actually frame what you're trying to.
Quickly, Gabriel, I want you to address the issue. Yes, we're talking about the central banks and regulation, but also it's the rules of engagement demand different kinds of relationships between the players, right? Because we are seeing new entrants coming in, like your relationship, for instance, with the traditional bank needs to change, as well as perhaps a fintech's relationship with perhaps either it could be a bank, but it could also be the central bank itself. So how do we approach that change that needs to be required out of the players themselves in terms of how they relate to each other?
Well, I don't think it needs to be complicated. I think that one of the tenets Clayton said, it's access to information. I think if everybody understands, you know, exactly where they stand in terms of the broader regulatory framework from a banking perspective, you know, the parameters in which you need to operate. So I think access to the information is key. And I think that the second part of it is that you need to have a collaborative approach in market. So, you know, the regulator in many ways need to have input into the way that new innovations are framed and that is positioned in market. And I think that, you know, that provides a cohesive approach in terms of, you know, making sure that you get things done.
Yeah, John, quickly as well. Yeah, please come in.
I just we talk about the regulator. I think one of the challenges that we've got is that it's not a single unified regulator. There are multiple regulators, and just within the SARB environment, you have a payments regulator in the form of the National Payment System Department. You have financial surveillance, who's obviously looking at exchange control. You have the FIC. You have other regulators. We now have a conduct regulator. We have other regulators that sit outside of the SARB. So this term regulator is problematic to me because there are lots of regulators. And I think one of the biggest problems that we face is that the regulators are not all aligned and have different policy objectives. And so I think if we reflect on the importance of payments and where payments sits, aligning collective regulation that oversees payments to a set of policy objectives, I think is very, very important. Yeah. And I think we've lost some of that, and that's a big driver of cost. You spoke about cost earlier. Yeah. So as South Africa, we're a FATF signatory, which means that we have to comply with the Financial Action Task Force international regulations. Mm-hmm. Now, those things require us to sanction screen beneficiaries and senders. They require us to do all sorts of things that stop and don't allow us to process payments straight through. And that adds massive costs to the equation. Yeah. So you have to create this regulatory alignment, and I think align to a set of key policy objectives, and then we'll all win. Yeah. But it's it is.
And this is even before we speak about the other African central banks, before we speak about international regulation, etc., etc. Yeah. You wanted to come in?
No, I'm good.
You're perfect. Excellent. All right, let's move on. Oh, before we move on, one quick point. I was going to say, but you also, the traditional banks, you do need to change your attitudes, isn't it, in terms of new players who come into the market? How do you do that?
Yes, I think you're right.
Yeah.
And I think...
Don't kick me, please.
No. We had a discussion yesterday about open banking. I think all the banks are realizing that we can't do this alone. If we think about what the sort of changes in tech, the heightened consumerism, the world in which we live today, our ability to partner and to work with different participants is, I think, what is going to set us up for success in the future. If we as banks try and do this alone, we will become obsolete, is my view.
Godfrey, a comment on me on collaboration. Just about 4 months ago, we were able to launch a digital banking product, and purely because of our solutionless mindset, our customers were saying to us that the bigger banks would not onboard them. So we need to craft a product that would allow them entrance into banking. And we found a tier 2 bank, and it was very simple. Each party knew what assets they brought into.
Yeah.
And so if there's a will and a meeting of the minds, this collaboration would happen. As you said, it's harder with the bigger banks.
Sure. How many banks did you talk to?
12.
How long did it take you?
For 4.5 years from first engagement.
Okay, illustrated. I don't think I need to make any further point on that. Okay, let's move on quickly. We've got 3 other points that we need to talk about. We need to talk about the technical convergence issue. Quickly, gentlemen, because I think our time is running out. Can I begin with you, Gabriel?
Yeah, look, for me, convergence is just a...
It's a given, is it?
Sorry?
It's a given.
It's a given.
It's inevitable.
And I think, and it permeates, I mean, it's John Sani's presentation yesterday morning just, articulated it so well. It's like just the dynamics of everything is changing. And I think that, traditionally, from a card perspective, we used to talk about plastic and chip and pin, and that was the conversation. And that was pretty much the conversation for 20 to 30 years. But that's just no longer the case. We've got, we're talking about big data, we're talking about open banking, we talk about APIs, now we talk about API aggregation, we talk about orchestration layers, we talk about, and I think that the reality is all of these things at the end of the day are built and are converging to, create that utility to the consumer. And I think that it's a race that is actually picking up speed. And as this picks up speed, the lines are blurring. And no longer can we just talk about a payment, or like John alluded to a little bit earlier, it's becoming, the lines are becoming really blurred. There's the different type of payment mechanisms are overlapping. And the way that we think about traditional merchant payment is also becoming a little bit hazy. Because why can't I be a merchant for a day?
Absolutely.
And what makes me a merchant as opposed to a consumer? And
it's a group blurring of the lines, isn't it? Because
100%.
you have a product that cuts across the different banks, even though you deal with certain banks here in South Africa and don't deal with others. Your competitor takes the others.
Yes. And
Masterpass, right?
That's right. And I think what's increasingly happening is that we, as we make these services available, we're trying to really solve the consumer pain point. And I think that what Convergence is doing from a technical perspective is creating that tool set or that baseline to enable it.
Quickly, what does it require?
I think, I think it depends on what you're trying to solve for. And I think ultimately what we're trying to solve for, as John pointed out, is we're trying to get rid of cash. And there's good reasons to get rid of cash. And as we, as technically the world is converging, the tools that's available to us to actually pursue that, to displace cash, allow fintechs like Ukesh, for example, to go and put the kind of construct together that they did. So from a Mastercard point of view, what we're trying to do is we're trying to organize the market in a way, but we're also trying to make the tool set available to the different participants that they can leverage this convergence that's happening to bring better solutions into the hands of the consumer.
Yeah. Ahmed, I would imagine that's something that you agree with.
Wholeheartedly. Absolutely. I would just add the consumer side, because for all the tech and the convergence, it really doesn't matter if you're not solving a problem and if it's not cheaper than the alternatives.
You're done?
Done.
Absolutely. Straightforward. John?
I think we touched on it earlier. Ahmed spoke about solving customer problems is at the heart of what we're trying to do.
Yeah.
And I think it's about all the parties coming together, and you've used the word collaboration. It's about how do we collaborate, how do we bring our different assets to the table to solve those customer problems.
Yeah.
So it's a combination of the schemes, so the schemes, the other payment streams. It's about different tech providers, and it's about how do we leverage the different assets and essentially solve those customer problems and displace cash. Cash is the enemy.
Absolutely. But we mustn't forget that we're also competing, right? And we're also trying to make margin on everything that we are doing, right?
Yeah.
How to do that?
And we collaborate to compete. So it's very important. That's a very important statement.
Collaborate to compete.
Yeah. I don't have to collaborate with my competitors, but there are players in the value chain that I will collaborate with to enable me to compete. So very specifically, if I think about fintechs and the introduction of what fintechs bring to the table, I honestly believe that the banks can collaborate with fintechs, can collaborate with the schemes to solution to resolve customer problems. But the banks are still going to compete with each other and other participants, the telcos, the big tech players. We're going to compete very.
We are playing in an environment that we know is heavily regulated as well, because they will be watching you to see what you're doing with who and what.
Yeah.
Okay, Shame?
Yeah, so I think if you look at Hello Group as a good example, they came in and disrupted cross-border remittance, where people were paying 30%.
I paid 30%, I can tell you that.
7-8% at Hello Group. The challenge is that payments is a race to zero. So the next disruptor is going to come and disrupt Hello Group, and they're going to do cross-border remittance for free. So my view is that payments is really a race to the bottom, and that you need to build value-added services around the payment, which the consumer really wants. Yeah. So the payment is just the conduit. The consumer wants it for free. They don't believe that there's a value associated to it. The value is in the service that they are buying or using, and that's where the margin's going to sit. So that collaboration has to exist.
Yeah.
Because essentially you're going to sit like the mobile operators right now that have this pipe, but they're not earning any revenue from Facebook on WhatsApp. So it's important that we collaborate so that we can share the pie. Because otherwise what happens is that I'm going to the market and disrupt acquiring and say, okay, no, our acquiring is free.
I'm still
so
looking at you
because
I'm thinking about the concept of a remit being free. Can it happen?
Of course it can.
Okay. It's like someone going back in 1960 or 1965 where there was no cell phones and mobile phones and saying you can use your phone to pay and that kind of thing.
Well, I suppose it's about saying, well, if you're going to do it for free, what are you going to ask the client to do with you as another service? So they may take out life insurance with you, and because they have life insurance with you, you're going to allow them to do cross-border transfers for free.
So let's talk about models. Let's build these models. What should they look like? What do they look like? What do they require from a regulation perspective, I'd imagine, but also from an investor perspective? You know, you are not going to be doing this for free. Let me start with you.
So I think what's been great is these fintech hackathons and these collaborative approaches. So we recently took part in the South African Reserve Bank Challenge, and what was great with that is we ended up being exposed to both the incumbents. So we were lucky enough, we got Standard Bank as our corporate champion, and we worked with FSCA, and for the first time we were in an environment where we were sharing thoughts and ideas across the table in this environment which was friendly fire, if you want to call it that. So we were
George is looking at you.
we were brought into a room and we said, well, how can we disrupt things? How can we do things? What are we? And it was an open discussion. No, you're doing that wrong. And this is, so as a fintech coming in, sometimes you don't understand why the regulation is there. You're just like walking in and we've learned the hard way. So fraud is something that I totally understand now. So we recently went through our Mastercard audit, and they said now we're very conservative. A year ago, we weren't conservative because we thought, it's great. Payments is awesome. There's no such thing as fraud. Trust me, I know what chargebacks are now.
So what is the solution? Is the solution building these models together, or is the solution to develop it, take it, and hope for some friendly fire that doesn't kill you at the beginning?
I think the friendly fire that doesn't kill you is the way to go. I really think we need to have more industry-aligned forums that we can get together as participants and really strategize. Like events like this are a perfect example where we've got all the banks in this room, we've got all the big retailers, and it's about sharing ideas across the fireplace and saying, well, how are we going to work together to solve this specific problem?
Absolutely.
And
John,
not
come in.
chase a siloed approach.
Yeah, I'm in full agreement with that logic. For me, payments
But do you fire first, John, before you collaborate?
Depends on who's.
Oh, your fire is friendly anyway. You don't kill at the beginning.
So I'm not sure it's friendly always. The point for me is that in order for payments to be successful, you need to look at an ecosystem holistically, and you need to.
Should it be regulated, that ecosystem?
Sorry?
Should it be regulated?
Yes, I believe that regulation is really important because we've got to remember that it's ultimately consumers' money that we're protecting. It's not the banks. Regulation is not there to protect the banks. Regulation is there to make sure that consumers' deposits are ring-fenced and protected. And whether we like it or not, there are lots and lots of injudicious folk out there that are more than willing to part consumers from their hard-earned money. And so protecting that environment becomes really important. I think what we don't do well is we don't adopt the logic of that risk-based approach. So a lot of regulation, to my mind, is not fit for purpose. So in the cross-border payment space, the regulation for $1 million transaction is the same as it is for a $100 transaction. And that, to me, is ludicrous. It can't be right. So we've got to understand what it is we're trying to mitigate, what risks we're trying to mitigate, and make it more appropriate to enable the ecosystem to function optimally.
Absolutely. Is that the way to go?
Yeah, I think there's an argument to be made for proportionate regulation. You need to understand the risks you're introducing into the ecosystem and then be supervised accordingly. And I don't know if it's easier said than done, but I think that's probably the way to go. That will level the playing field to a large extent and give, whether it's Standard Bank, whether it's Ukesha, whether it's Hello Group, trying all being involved in certain payment legs, the ability to innovate, the ability to scale, the ability to add value.
Yeah, but who leads the creation of that ecosystem? Is it better left to the players themselves? And then I can't remember who said that regulation needs to follow innovation. It was you. Yeah.
I think it should be the individual players. You know what you're good at. You should, and you know what markets you can service. It's no sense us pretending we can service high net worth individuals or complex leverage deals and that. That's not our target market. You know what you're good at.
Yeah.
You know the type of partners you need to be successful, and just go for it.
Yeah. Should you be left to develop on your own and then come in when you want to come in, or is it better off that you co-create?
I think co-creation is a better way to go, because you can't be good at everything. You don't know when you need somebody. And also on the regulation front, I think it's better to have some certainty, because with the investments you make and the endeavors you go through, it's really a bad place to be if you have to scale back, if you then have to disappoint customers. So rather some certainty, clarity, and then you can go all in rather than being kind of half measured in.
Absolutely. Gabriel?
I think that different stakeholders bring different things to the party. I mean, it's a little bit what Clayton alluded to. We're having a conversation that started off with the SARB doing a hackathon for fintechs to now participate as part of a broader play, and we had a bank involved within that environment as well. 5 years ago, nobody would have thought about that. And I think that, when we talk about what works in terms of the models, it is the different stakeholders that, contribute to the value story. And ultimately, the value story is what we're trying to solve for, to fix, pain points. So I think that, and again, to go back to the whole issue around the regulation, I think that, we're going to see more of these fintech companies that collaborate with telcos and that collaborate with insurance entities and that collaborate with retailers, and out of that there comes a much broader value story than simply payments. And the payment component will be regulated. But that's not the true value story ultimately for that consumer. And in many ways, the meaningful examples to point to are what's happening in the super app space with people like Alipay, where it's a payment enablement, but it's almost a marketplace that sits within a single interface for that particular consumer, that they can do anything from purchasing tickets to, taking out insurance. And I think that dependent upon what that value story is and how it gets framed and articulated, then at the back of that, there will be some components that's regulated, but that ultimately is not the true value story to the consumer.
Yeah. Talking about the value, that's what we're all about, right? The value for the consumer. So let's talk about that consumer. So the other day, I walked into a Food Lovers Market store in Sandton, and then I realized I'd forgotten my wallet. I then approached one of the tellers and I said, could I buy still without my card? And I didn't have cash. And she said to me, it couldn't be done. I said, call your manager. Call your manager. So long story short, I was eventually able to pay with my phone because I remembered I had seen somewhere where it said on my phone, FNB Pay. And eventually I was able to make my payment. Everything that we're talking about here is about the consumer ultimately. So let's talk about the role of the consumer there and how that consumer is going to be able to realize the value. But my little story, I think, speaks to a lot of education that will be required to carry the consumer with us as we change and innovate and compete and get regulated. Can I start with you?
Yeah,
how do we ensure that?
It's very true. I mean, I think that as much as we like to talk about things like omnichannel, and we like to talk about things like consumer centricity, and that we're trying to revolve everything around the consumer, and that from a payments perspective, it doesn't matter where you are, what time of day it is, or what you have, you should be able to make a payment. And then we also like to talk about, that it's secure and that we're, protecting the interests of the consumer and keeping money safe. But I think that the reality is that while all of that is true, the education or the time that it takes to get consumer adoption takes long, because all of these things that we're talking about is based on a platform play. And there are always two sides of the platform. In our case, it's the consumer and the merchant. And even if you've done the enablement, you do have a long journey to make to get adoption from a consumer perspective. And I think, specifically it's true within the payment space. But I think that the experience that we've had over the last couple of years, if we look at the proliferation now of mobile banking and we look at the availability of services and the growth of e-commerce, I think that it is picking up pace. But to your point, I think that there is a journey around the consumer side in terms of education.
Absolutely. There's a big journey that needs to be made here. Let me come to you quickly, guys, because we've got about 4 minutes of the show left. So let me get your thoughts, and then we get the other thoughts of the other two gentlemen.
Our sales channel is very much a direct channel. So we've got about 200 employees who are recruited from within the communities which they reside in. So they act as not only salespeople, but also as ambassadors as well as support staff. So the type of individuals that we deal with, they need that education. Mainstream advertising is just not the right channel.
Yeah.
So, and also they need that trust. They need to know that they're giving their hard-earned money to some institution that they can trust them. So our sales team play a pivotal role. It's a combination of acquiring customers, but more importantly, educating those customers. Otherwise, it's a wasted
And that education should also include the fact that you're telling the customer that for me to be able to build a platform that you trust, I've got to have your information. I've got to have your data as well.
Yeah, so again, if it changes the customers' lives, if there's a tangible benefit, they will give you whatever information, documentation you require.
Yeah.
If you cannot demonstrate that, that is when they are hesitant about sharing information and documentation.
Absolutely. John?
We as the South African industry, did a tour of certain countries where mobile payments are prolific. And we harnessed a whole lot of learnings out of Nigeria, Thailand, India. And I think for me, probably the most relevant learning was that if consumers are going to adopt mobile payments, you need to make it easy for them. And the logic of...
As easy as money.
Yeah, quite correct. And the logic in a smartphone of no more than 3 clicks to enable a payment is what was driven in Thailand, and it's been hugely successful. If you think about other payment streams, you have to replicate the ease of cash. So it's incumbent on us as players to make it simple The tech might be complex,
Yeah.
but the experience has got to be simple.
Yeah.
And if you make it simple, I think through experiential learning and shared engagement amongst communities, people adopt it easily. You don't have to do big education programs.
Yeah,
You've
yeah.
just got to enable people to solve problems.
Yeah, I remember one of your slogans in the years gone by, simpler, better, faster. I don't think the bank has ever come with a better line through the years. But now maybe you need to add simpler, better, safer, right?
Yeah.
Yeah, 100%.
And for you, it's easy, right? Because you are coming in with a real value proposition for the consumer, because you're saying we can do this for less.
Yeah, so I think what I second Ahmed's comment in terms of, the consumers need to trust the solution, and they buy from their peers, and they understand. So it doesn't help us putting a billboard up and say, accept QR payments. They need a street side merchant to come to him and say, I sold 4 more caps today because people can now pay me with this. And there's this trust, and they know that they can go down to the Pick and Pay store and collect their money.
Yeah.
And they're now talking to each other, and they're using it, and they're saying, this thing really works, and this is the value add.
Yeah.
And then we've also had the experience. So we thought KYC would kill our business,
Yeah.
and it actually didn't. So we had this perception that the users didn't want to upload their ID, and
Yeah.
they didn't want to
Yeah.
give us their details. They were more than happy to give it to us, because they had been using the platform, and
Yeah.
it was making a difference in their lives. So for them to just give us their proof of identity, proof of residence, was actually not a challenge.
Yeah.
We thought it would be, but they were more than happy, and they're happy to use the channels like WhatsApp or the app or etc., or get a friend to help them to do it.
Yeah.
Whereas there was this perception in our minds when we launched that the consumer would be against doing that.
Especially at the lower end of the market.
Exactly. Yeah. They were more than happy to do it. So it's been a great learning for us in terms of that right at the bottom end of the market, they're seeing the value of the platform, so
Yeah.
therefore they're willing to go through the extra steps
Yeah.
to actually use the platform.
Absolutely. I have a minute left, so I'm going to give it to one of you to help me just sum up, if you can, what this future that we've tried to discuss through the various topics that we've put together here ought to look at. Can I go to the neutral player in the room, right? You guys are all competing. Gabriel.
Well, I think it's just a summary of what we talked about, right? And the summary is that, from a regulation perspective, we're trying to protect the consumer. From a value story perspective, we're trying to solve the pain points for the consumer. And the way to get there is through collaboration, and that collaboration is born from the tool set that we have at our disposal. And the tool sets are the things that, from a macro perspective, is driven by technical convergence. And I think that the future is bright in the sense that even today in this room, we have all of the participants that we need to build these value stories, and we have all of the technical expertise that understand that complexity. And we also have the expertise to know, what that consumer experience must be and how to really make it efficient. And I think that, the future is one where the consumer stands at the center,
Yeah.
and we as stakeholders collaborate together to build out that value story to deliver new services.
Absolutely, and regulation must follow innovation. I'll take that with me home. Thank you. It is now your opportunity to ask questions out of these gentlemen, and if you, perhaps when you are asking those questions, just identify who you are, your organization, so we've got context. There should be roving microphones in the room, and I can see a number of hands now, if we can.
So hi everyone, I'm Abhinav from a company called Fluid AI. We work in the AI space. And I think when you guys were referring to the role of the regulator, there is the 3 pillars, right? Protect the customer's money, protect his data. And the third, the new era of regulation is around creating more value for the customer, kind of leveling the playing field, maybe through techniques like open banking, interoperable QR. We're seeing it in PSD2 in Europe. In India, they're doing UPI. South Africa has its own kind of pace in these areas. So in this third segment of creating a level playing field, getting more innovation in, do you guys feel the regulator should invest more time and effort and then further increase costs for the players? Or do you feel that the regulator should just go away in this third space and let the players themselves figure out a better way of creating value?
Thank you very much. Who wants to take it? You want to take it?
Let me start. I don't think the regulators are going away. Let's start with that as a premise. So we can't wish them away. If you think about the South African context and you think about the introduction of a financial sector conduct authority, and you think about looking at protecting data, you think about overseeing behaviors, we need to manage the stability elements, the conduct elements, And we've got to understand that the new gold is data and protecting consumers, the privacy of that data for consumers. And so we're going to have to work across all those different pillars. We're going to have to engage the different regulators, and we're going to have to help the regulators regulate better, I think is the articulation. Yeah. We can't sit back and wait for someone to write regulation. That's the disaster that's just a disaster going to happen.
Do you want to expand on your regulation following innovation? Because I think in part it answers to that, doesn't it?
Yeah, well, I think what's happening, I think it's just getting more complex. I think there's more moving parts, and as the complexity increased, to John's point, ultimately it has to be almost like a co-creation approach in terms of making sure that as we go through this journey to define the new solutions that we're putting out there, the regulator has to come on that journey with us. And there's a practical example in terms of QR that we're living at the moment where we, as a team, we are spending more time at the SARB, not to position anything, it's just to educate. It's to take people through the flows and help them understand, what is the role that QR plays and where are we going. And I think those conversations are ultimately what informs the regulator itself to come up with the framework that they need to do. And so I think it's something that we need to do in perpetuity. We need to engage on a perpetual basis.
Sure. And the regulators need to create the platform for that to be enabled.
Yeah.
Okay. There's a lady here.
Good morning. My name is Stasha Betty. I'm from Massmart. We started the conversation around cash still being king and the cost of cash. But I suppose the question is, as leaders of commerce in this room, how are we pressurizing the power utility provider to make sure that our customers that are the informal market that use cash actually have power for not only for their mobile phones, but for systems to be able to process payments, because all payments are done through electricity in some way.
So you're right. I think if you think about where National Treasury sit and some of the policy objectives that are set at a national level, power and giving people access to power is key on the national agenda. It's not only to enable payments, but it's obviously to build infrastructure and to build an economy. So Treasury are very focused, obviously, on stabilizing Eskom. We have a big problem with Eskom as an SOE. The long-term success of our economy is dependent on us getting power sorted and being able to make sure that everyone in the country has access to power. So, I mean, it's being driven at the level of National Treasury, and I know the presidential focus groups are looking at investments into this arena. You would have seen there's investments into green energy now and all sorts of things to supplement access to power.
Any other comments? Yes?
Hi, Stephen from Standard Bank. I think this is a great conversation that we're having on the continent going cashless. I think for me, as a topic that I'm passionate about, I think the one thing we don't mention in collaboration, and for me the problem is not fintechs, but is how do we bring other industries such as retailers. If you think about that 65% in South Africa of people who are still using cash, 90% of it is inclusive. Places like ShopRite have the highest foot flow than any other place that we can actually think about. How do we then begin to collaborate with these people, actually bring them in, not just empower them to be able to do the transaction, but bring them into the solutioning for the values that are going to be added to the end customer.
Yeah. Is that you?
What you see is that the retailers. I think one of our Pick n Pay sitting down there. We just had Time Bank launch in that environment, so we're seeing that collaboration in real time in South Africa. They just added 1 million customers by proving that point exactly, that people come into that environment, they're there every day, they're dealing with their cash, so why not start a bank inside of a retail environment? The reality, though, is that we can look back, and Nedbank did something with Pick n Pay previously, and I think a lot of people have tried to get it right. Whether it actually will work, I still think people trust banks to be banks. They trust telcos to be telcos. They trust retailers to be retailers.
Yeah.
We always see this, I think Standard Bank just launched a telco. They've got an MVNO. Vodacom just launched a financial services business. So I think what people are chasing is revenue, because we're listed companies and they need to chase revenue, so they put their toe in other people's ponds to go and find revenue there, but they should just stick to their knitting.
Yeah.
So my view is, the retailers that focus on being great retailers stay great retailers.
Right.
When you start, some of the big disasters have been companies trying to grow in areas that they're not specialists in.
Okay, let's take some more questions. Sorry. Yes?
Hi, Carlo Ritchie from Network International. Any view of when the government, or more specifically the central bank, should take the proverbial stick to cash, like in countries like India where they stopped low-denomination notes, countries like Egypt where there are initiatives by the government, so for example, any payments to or from a government department over a certain amount now must be in a digital form. Should our government and neighboring countries be looking at that sort of more forced habit to consumers?
John?
So we've had lots of engagements with the Reserve Bank about why they published Vision 2025, and there's a conspicuous absence of a clear articulation that cash we must decash. And the answer that was given to me was an interesting one, and it is this belief that for the lower end of the market, cash is their only way of making payments. And so we've started a set of engagements now off the back of what is called Project Future in South Africa, and very specifically what we want to do in the person-to-person low-value space, so a real-time payment solution, to build what we've called a case for change. And the case for change is showing the macroeconomic benefits of decashing and driving what I would term financial deepening. So in South Africa, a lot of people have got accounts, stores of value, but they just use it. They use their card to draw cash out. And so to get to financial deepening, you want to bring people into the formal economy, and you want to allow them to transact. It enables the participants to build up history and to broaden their offerings to them. So the case for change is something that we're driving very hard to engage with the different regulators. We have a session set up with the new Deputy Governor of the Reserve Bank who looks after payments, to take him through the logic of the case, and he's an economist, and we want to talk to him very specifically about setting national objectives to decash. But it's a very politically very sensitive topic.
Gentlemen, a round of applause for my guests, please, if you can. And that's our debate here from the Mastercard 2019 Indaba. Thank you very much indeed for joining us here at CNBC Africa. Until next time, goodbye.